Whenever I see something, take these very low interest rates, even negative interest rates, I'm always thinking, boy, I'm looking forward to talking to Warren about that. One thing that's fun is you have a very optimistic view about things.
I think if I'm a sort of neutral in terms of optimism or pessimism, and I look at the facts around me, I look at what has happened in my lifetime. Put three of me end to end, and you're back before the Declaration of Independence was written. That progress in 3 lifetimes like mine it's mind-blowing.
Bill Gates has more money than you do. One video isn't going to change that fact. However, this one might spark changes to your portfolio that will make you wealthier. You might wonder why Bill Gates' portfolio would help with that, since he didn't use his tech and math skills to become a super investor like Jim Simmons. Bill Gates may not be Warren Buffett, but they were friends a very long time, and Gates, as the former world's richest man, travels in the inner investing circle. He influences economics more than most too, as the longtime face of a $2.5 trillion company in market cap. As such, he's highly equipped to perform the highest levels of due diligence. Beyond guessing like the rest of us, he's in the know regarding what companies face strong growth prospects, and we can use that knowledge to our own portfolio's gain. Let's get into the 10 largest positions in the Bill and Melinda Gates Foundation portfolio. Bill looks to make big bucks here, and you might be able to as well by following his lead for some of your own investments. 10th largest position, UPS, ticker symbol UPS. Founded in 1907, as most of you well know, UPS is a logistics and package delivery company that offers supply chain management services. More than a mail and package company, UPS has the following business segments: supply chain and freight, US domestic package, and international package. Gates owns about 2.3 million shares of United Parcel Service. This is 1.79% of the complete portfolio package. UPS's year-to-date return as of November 22nd approaches 10%, which is well below the S&P 500's performance. Why the depressing difference? UPS has been getting hit hard by supply chain issues and rising labor costs needed to keep many of the crucial employees from leaving, specifically truckers and service workers, both of which have exited the workforce at an alarming rate when talking about the workforce at large, due to a combination of a government safety net and finding more lucrative opportunities elsewhere in the experimental, opportunistic world developing the longer society remains restricted. Obviously, the rising costs from inflation account for difficulties in the sectors UPS specializes in. UPS deals with a recent history of political problems as well that tangled post office funding into a mess worse than any earbuds you may be listening to this video with. And thanks for choosing us, by the way. UPS may not be music to short-term investors' ears right now. Regardless, it hits the high notes of significant necessities, a strong market position, and a framework to recover if inflation effects subside. Many experts, ranging from Buffett to Burry, don't predict that day will be coming anytime soon. UPS delivers an attractive option for optimists looking for a long position holding. 9th largest position, Kansas City Southern Industries, ticker symbol KSU. Kansas City Southern sounds like a college basketball team. It actually does its business on the railway rather than the court. As you'll see later in this video, Gates takes quite an interest in railroad investments and called for a green industrial revolution a few weeks ago. Whether or not the revolution will be televised, it will certainly involve transportation. Kansas City Southern plays a big role in that aspect. Canadian Pacific, CP, and Kansas City Southern, KCS, have jointly filed a railroad control merger application to create the Canadian Pacific Kansas City, CPKC. It would be the first and only single-line railroad linking the United States, Mexico, and Canada. Assuming the effort succeeds, this is big news for investors and the environment. Railroad development over the next 3 years creates plenty of jobs, cash flows, and avoidance of more than 1.5 million tons of greenhouse gas emissions within 5 years due to improved railroad efficiency. This news excites Gates and investors who aren't so elite. KSU shares are up over 52% year to date, almost doubling the S&P 500. Gates clearly picked a great time to open this position. It might work out well for those who follow and trust the stability of the railway industry, albeit surely supply chain issues restrict its full potential at the moment. Largest position, Crown Castle International, ticker symbol CCI. Founded in 1994, it's a REIT that offers access to wireless infrastructure via long-term contacts. You may have never heard of Crown Castle International, but I think REITs are a great idea right now, and I'll explain why in a minute. In the case of Crown Castle, the company has two business segments, towers and fibre. Gates owns about 4.5 million shares of Crown Castle, accounting for 3.41% of the Bill and Melinda Gates Foundation's portfolio. Its shares are up over 21% year to date. A real estate investment trust, REIT, is a company that owns, operates, or finances income-producing real estate. How can they help your portfolio prosper? REITs provide an investment opportunity, like a mutual fund, that makes it possible for everyday Americans, not just an elite like Bill Gates, to benefit from valuable real estate, present the opportunity to access dividend-based income and total returns, and help communities grow, thrive, and revitalize. REITs are total return investments. They typically provide high dividends plus the potential for moderate, long-term capital appreciation. Long-term total returns of REIT stocks tend to be similar to those of value stocks and more than the returns of lower-risk bonds. Additionally, REIT dividends are substantial because they are required to distribute at least 90% of their taxable income to their shareholders annually. Their dividends are fueled by the stable stream of contractual rents paid by the tenants of their properties. The relatively low correlation of listed REIT stock returns with the returns of other equities and fixed income investments also makes REITs a good portfolio diversifier. 7th largest position, Microsoft Corporation, ticker symbol MSFT. Gates is no stranger to Microsoft. That's quite an understatement. One interesting fact that isn't is that at one point, Gates had the equivalent of 2.06 billion shares in the company in 1998, when the software maker first became the world's most valuable company. Microsoft climbed to the top of the market cap mountain again in late October. Gates' 1998 holding would have been valued at about $693 billion on the day Microsoft became the world's most valuable company again. That unthinkable net worth is more than Musk and Bezos combined. This $828.2 million position fails to hit the same, but Gates opened a Microsoft position again. About 2.94 million shares account for 3.57% of the portfolio for now. 6th largest position, Ecolab, ticker symbol ECL. Founded in 1923, this company offers products and services in water, hygiene, and energy segments. The company has the following business segments: global institutional and specialty, global energy and life science, global industrial, and other. Gates owns almost 4.6 million shares of Ecolab, accounting for 3.93% of the overall portfolio. You'll see in the next several minutes how Gates mixes iconic companies with a proven history of solid production and diversified expansion that will withstand the current or any future cloudy economic forecast. He also steers his interests and investments towards future sustainability. This strategy bodes well for any of our portfolios, and you might pick up some investing inspiration by watching. 5th largest position, Walmart, ticker symbol WMT. The number of people who wish they didn't know Walmart is much larger than those who are aware. Just in case you somehow are on YouTube and don't, it's a giant in retail and wholesale capabilities, stocking an assortment of merchandise, and at superstore services at everyday low prices. Gates owns almost 7 million shares of Walmart. That number checks out 4.16% of Bill and Melinda Gates Foundation's overall portfolio. Gates' position is down a little on the year, and so is Walmart's share price. Walmart's share price is down almost 2% year to date. Many ordinary people do their shopping at Walmart. Many extraordinary investors also shop for Walmart shares. You don't need to be one of the world's biggest techies to understand why Walmart remains an attractive investment in these uncertain times. It's built better than pretty much anybody in the shopping space to survive. 90% of the population lives 15 minutes from a Walmart store. Even if everything goes south again with setbacks, Walmart has the economies of scale, scope, brand loyalty, and at the end of the day, overall company strength to win in the wreckage. As a cost-cutting measure, Walmarts are even ending checking lanes in favor of self-checkout services to offset the effect of a lack of retail workforce supply and the costs hit from people still not leaving their house. Walmart meets those remote needs by selling almost 3 times as many products as Amazon on Walmart's website. Fourth largest position, Canadian National Railway, ticker symbol CNI. Founded in 1919, this company deals in rail and related transportation business. The company offers the following services: supply chain services, business development, rail, intermodal, trucking, and maps and network. Gates owns over 13 million shares of the Canadian National Railway. The company drives 6.52% of the overall Bill and Melinda Gates Foundation portfolio. The Canadian National Railway chugs along at a slow but steady year-to-date return of 18%. Bill Gates isn't the only nerdy rich white dude named Bill who takes interest in this investment. When Canadian Railroad Canadian Pacific was trading at the lowest valuation relative to earnings and shareholders were unhappy, Bill Ackman hired respected railroad executive Hunter Harrison as a consultant to learn the industry. He later named him president and CEO of Canadian National upon successfully winning a proxy contest. Harrison's leadership generated far more greenbacks than greens. In 16 months, Canadian National became one of the most profitable in America. The stock rose from $46 to $151 per share, and market capitalization exploded from $1 billion to $25 billion. Third largest position, Caterpillar, ticker symbol CAT. The third largest position is the charm of many blue-collar lives. Founded in 1925, Caterpillar makes construction and mining equipment, more than anyone in fact. With 2020 sales and revenues of $41.7 billion, Caterpillar Inc. is the world's leading manufacturer of construction and mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel-electric locomotives. The company has the following business segments: resource industries, construction industries, financial products, energy and transportation, and all other. Gates owns about 9.69 million shares of Caterpillar, accounting for essentially 8% of Bill and Melinda Gates Foundation's portfolio. Caterpillar returns are up over 12% year to date. Gates is a big fan of making money, but he also champions making the environment better. Caterpillar scratches that itch. In September, the company acquired US carbon capture company Carbon Point Solutions. The purpose is to further reduce greenhouse gas emissions while helping Caterpillar meet its climate-related goals. Another big move that will help the future environment is Caterpillar's Task Force on Climate-Related Financial Disclosures, TCFD, framework for sustainability reporting starting in 2023. Of course, nothing that doesn't make dollars makes sense to Gates. Investors don't need to worry about either. This Caterpillar's finances soar like a butterfly. Caterpillar's third quarter 2021 sales and revenues floated up to $12.4 billion. That number represents a 25% increase compared with $9.9 billion in the third quarter of 2020. Why? The company attributes the increase to higher sales volume driven by higher end-user demand for equipment and service and the impact from changes in dealer inventories. Dealers decreased their inventories more. Profitability was much stronger too, with an operating profit margin at over 13%, better than last year's operating profit margin by quite a bit. Profits project to rise over time as long as the next generation's interest in investing does. You'll see in the next 5 minutes or so how that same point applies to Gates' next portfolio position and potentially your own. Statistics and actions show that millennials and Generation Z care more about environmental sustainability than previous generations. Caterpillar didn't just start their efforts to support the conservation cause. Caterpillar Inc. was recently named to the 2021 Dow Jones Sustainability Indices, DJSI, including the World and North America indices. This is the 22nd time Caterpillar received that distinction. Doing good will translate to doing well for Caterpillar for years to come with that kind of track record. Keep in mind too that eventually the supply chain woes that affect the whole global economy right now will simmer down eventually, and Caterpillar will be one of the biggest benefactors of that with all of its heavy machinery-based operations. Second largest position, Waste Management Incorporated, ticker symbol WM. Founded in 1987, it's a holding company that offers waste management environmental services. In fact, it's the largest at doing so in the world, which includes residential recycling offerings. Waste Management Inc. helps 21 million people. The company has 3 business segments, Tier 1, Tier 2, and Tier 3. Gates owns 18.6 million shares of Waste Management, accounting for 11.47% of the Bill and Melinda Gates Foundation's portfolio. Its shares are way up on the year, over 44% in fact, which handily beats the S&P 500. The company expanded recently to capture the gas produced by landfills and turn it into an energy source to increase its sustainability. President Biden pushes for environmentally friendly policies that certainly help Waste Management's company health. We'll hopefully continue to operate in recovery mode, and Waste Management is a benefactor of that recovery. In the longer term, well beyond one presidency or business cycle, my environmental consciousness point about CAT stands tall for this investment too. Largest position, Berkshire Hathaway Class B stock, ticker symbol BRK.B. Gates saves arguably the best hedge fund of all time for last. Gates owns about 38.7 million shares of Berkshire Hathaway, accounting for 45.23% of Bill and Melinda Gates Foundation's portfolio. Berkshire returns its average rate of around 20% year to date, which it's accomplished since 1965. Berkshire has historically doubled the S&P's return over that long span. It shouldn't be surprising that 2 of the biggest billionaire businessmen were close friends. Buffett even at one point declared he would give most of his massive $108.7 billion fortune to the Bill and Melinda Gates Foundation. All good things, including friendships, must come to an end though. Shortly after the divorce announcement, Buffett resigned as a trustee of the foundation. The two may not be good personally, given the sketchy details of the relationship ending that was not a good look for Bill Gates. Feelings aren't hurt enough on Gates' end to let the personal get in the way of profit, as Gates increased his shares in Berkshire's Class B stock last quarter by 17%. This time, Gates sold 5 million shares. That seems like a lot, and to us, would be. To Gates, that isn't very much. When we're talking of a portfolio at this $23.86 billion value though, that's just regular maintenance. Nothing to really report there. Gates combines growth potential based on forward-thinking projects with fundamental, time-tested winners. He clearly likes companies that either enjoy a dominant market position or strive to build moats that serve as barriers of entry for competitors. The portfolio sticks to spaces he understands well, and for the most part, interacts with for years. We can all subscribe to that thinking to build a stronger portfolio, and you can subscribe to this channel for a stronger understanding of investing and finance.